Chinese EV maker BYD plans to invest $1.3 billion into a factory in Indonesia. It will be the company's 6th overseas plant as it expands. Vietnamese EV maker VinFast saw deliveries for the fourth quarter jump by 35%, but still falling short of its 2023 delivery targets. Investors do like some new launches it had made recently at the CES show. VinFast made an explosive debut on the stock market last August. The stock down now over 2% on Thursday and almost 85% lower than its original price debut. And the U.S. government is spending $150 million to upgrade EV charging stations across 20 states. It's all part of an effort to build out a national EV charging network. China is predicted to take the lead in the global auto exports in 2024, surpassing Japan in full-year sales. The Association of Automotive Manufacturers reports nearly 5 million cars sold overseas last year. It says those high sales numbers is owed to the improved quality of Chinese cars. Huang Fei has more.
2023 saw record passenger vehicle exports from China, partly driven by the global demand for electric cars. BYD remains at the forefront of the trend, overtaking Tesla in the fourth quarter to become the world's top-selling pure electric vehicle brand. The Shenzhen company credits its success to a long-standing focus on electrification and substantial investments in technology.
As one of the first companies in the world to develop electric vehicles, BYD has more than 2 decades of experience. We have core technologies across the entire supply chain, from battery and engines to control systems. With more than 90,000 research engineers, we've invested hundreds of billions of yuan in research and development over the years.
BYD has established a strong international presence, with products now available in 59 countries and regions. Your first overseas factory for passenger vehicles in Thailand is set to begin production this year. What more can you tell us about your localization plans?
Our Thailand factory can produce about 150,000 cars annually, catering to the entire ASEAN market. We are also building 3 new factories in Brazil and are set to start production in the second half of the year. Last month, we announced a new plant in Hungary. China is not only a global automotive giant in terms of quantity, but also quality. I believe China's vehicle exports will enjoy a new wave of opportunities to boost scale and brand awareness.
Meanwhile, Chinese carmakers Chery, Geely, and Great Wall witnessed surging sales in Russia last year, following the exit of Volkswagen and Toyota. But as Chinese firms gain more global clout, geopolitical challenges persist. Import tariffs have hindered most automakers from entering the U.S. market with Chinese cars, and the European Commission is investigating Chinese subsidies, a move Beijing criticizes as protectionist.
China's electric vehicles industry leads the U.S. by at least 5 years. Washington's barriers may protect the local players, but that doesn't mean Chinese companies can never break through. It takes time to establish local production, infrastructure, and navigate regulatory barriers. Southeast Asia is more accessible in terms of geography and consumer culture. Chinese brands are scaling up there, as well as in South America and the Middle East. But I believe the U.S. and Europe remain a long-term goal. It's just a matter of finding the right timing and approach.
As countries worldwide implement regulations to cut fuel emissions, China is poised to meet the increasing demand for new energy vehicles. China's supply chain advantages and its cutthroat domestic market have propelled its products to outperform many Western legacy brands. UBS forecasts that Chinese car makers could control 33% of the global market by 2030, nearly double their share in 2022. Huang Fei, CGTN, Guangzhou.
For more about the EV market and China's growing dominance in this, Tyson Jominy, VP Data Analytics at JD Power. Good to see you. Thank you. Welcome to the show. You know, I don't want to separate China and the U.S. too much, but just overall globally, we have seen this huge momentum in going to EV, where every car maker now has multiple versions of sort of older vehicles. But then something happened late sort of last year and maybe even early this year. We've lost a little momentum here. What's going on?
Yeah, thanks for having me back. I mean, it certainly is true. The EV momentum in the U.S. Has slowed, even as the rest of the world, it seems to have pushed along. I mean, there's a lot of reasons why that takes place here in the U.S. I mean, it could range from political through cost, through infrastructure, quite honestly. I mean, the U.S. infrastructure for charging EVs lags the rest of the world.
I mean, China, I would assume, has similar challenges, also building out the infrastructure. Is China doing something different or better than what some of the other countries are doing?
Yeah, China seems to have a commitment from the top down of the country to implement new energy vehicles around the board here. The U.S. is trying to catch up. It has introduced legislation to encourage consumers to buy EVs at the same time to invest in infrastructure. However, that bill greatly favors what we call variable marketing, which is incentives to get consumers into vehicles, really at the expense of infrastructure, which I think is what is mostly needed in the U.S.
Aside from infrastructure, though, the vast majority of people that I know that own EVs, they essentially charge their vehicles at home, in a garage, or wherever they live, and then they drive to work where there might be another charger at their office. And the number of miles they put on is usually less than 50 to 75 miles, say, per day. So that's more than enough. Now, if you take a long road trip, I get it. That's something different. When you mean charging stations, do you mean at offices or at home?
Well, I mean, the public stations that one would find on a road trip or outside of their house. JD Power data shows that about 92% of all charging takes place at home in the United States. So if you're a consumer and you don't have off-street parking or a garage or a way to charge your vehicle conveniently overnight, right now the EV market probably isn't for you in the US, and that's where the investment's needed, is to get that second piece of the buying population into EVs.
Right, and I asked that because maybe that's part of the problem, is the overnight problem. If I'm on a road trip or I'm doing something, I'm not going to leave my vehicle there for 2, 3, 4, 5 hours. I want to go in like 5 minutes. And the time it takes to charge the vehicle, some people I know are talking about this, but that has to be an issue or a challenge if you're thinking of solely relying on EVs for your life.
Well, it is to an extent, and that may be a temporary problem, excuse me. Manufacturers like Hyundai and Kia are enabling some very fast recharging times now to get consumers back on the road in as little as 15 minutes. So the idea that it would take a long time, it's pervasive and it was real, but it's probably going to go away. But to be honest, a lot of American consumers say, I don't have the time to stop for 40 minutes every 2 hours while I'm driving. So long as that's the belief, and whether that's true or not, consumers here believe that, and that will hold up the EV market.
Hertz recently made pretty big headlines. They, of course, are a major rental car company here in the U.S., and they made a huge commitment to EVs. But then they said they were going to cut back on it, and part of it was demand, but the other part, they talked about maintenance. What's going on here?
Yeah, so Hertz is paring back their EV fleet. They still will have a significant fleet, but what they have found is that they're a daily rental company, and they were having issues renting EVs daily. And if a vehicle sits around, it's not making money for them. So they weren't excited about that aspect. Consumers weren't demanding it. And then, of course, they were finding that as consumers were driving these vehicles, if there's a repair need, it was taking a long time, and it was costing far more than an ICE vehicle costs to repair.
We often talk about Tesla as essentially the de facto winner right now of the EV world. But every single manufacturer, almost every single one, has their own version of EVs. And there's been some real question marks about the profitability of some of these vehicle lines, from not just a factory, but also to dealerships. What is happening with the economics of EV? Has it gotten better? Because in the past, they weren't making money.
Yeah, and certainly 2023 was a seminal year for EVs, with BYD surpassing Tesla in total sales for the year. But Tesla seems to be the one U.S. Sales company that has figured out how to get over that hump of producing EVs at scale profitably. The rest are still very challenged by that. I mean, I think we're seeing automakers like GM and Ford that are struggling with getting up to speed producing this new technology. It requires an all-new plant, essentially, to produce these vehicles. And there's a learning curve there that the automakers are still struggling with. And as they get over that, start to produce at scale, that will bring down the cost of EVs and make them more cost competitive at the dealership.